The tax-free retirement, baby. It's there for the taking for just people who wake up. I'm going to hark on. I know I just probably a couple weeks ago I did a video on this. I'm going to do it again. I'm going to do it again. I'm going to do it again. Unsubscribe if you need to, but know the flipping tax code. Anyway, I just love it. I love it. I love it. This is fun. And when you show people like, oh, yeah, that's pretty good. Don't forget to subscribe to my locals channel. I do a live stream every Friday at 4 p.m. So I'll be doing one mañana at 4 p.m. Eastern. And then don't forget to subscribe to my email list too. Both will be in the doobly-doo. All right. So first I got this from, I can't remember, George, Greg, something like that. He said, just want to say thanks for the informative videos and access to Right Capital. I'm retiring next month, and thanks to your videos, I've learned how to plan and maximize Obamacare and minimize my taxable income. This year I can spend $87,000. My federal and state taxes will be less than $2,000, amigos. $2,000. My health care through Obamacare in Vermont will be capped at $3,500. I'm 64 and my better half is 58. We have a few more years till Social Security. If Finney keeps barking like that, you might have less years because he'll drive you insane. He tried to get up. That's why I came down here to work on my book so I could get away from those knuckleheads, Kevin and Lee, Pablo and Finney. Like, Dad, play. I'm like, dudes, I got work to do, and I can't help but do videos. I just love doing videos, so I just love it. It's fun. You should see. Well, I don't know if y'all can see that, but I got so much stuff I want to talk about. It's crazy. And I try not to overwhelm you guys with videos, but I like it. It's fun. And sometimes I think it's informative. I mean, if I wasn't that informative, I wouldn't have 74,000 subscribers. Anyway, I'm 64. My wife is 58. And we have a few more years till Social Security, but we're taking our videos to heart and apply the principles you've illustrated. As a result, we'll enjoy nice retirement and not worrying about make ends meet. That's crushes. This lady the other day, $4 million of income she'll have over her and her husband's life. She's going to pay $336,000 in taxes. $336,000, of which $23,000 is his first year. $4 million of total. That's inflation adjusted, as is the taxes. $4 million of income. Her total outflows, which is the money she needs to cover all that income, plus the taxes, plus her expenses and everything, is $4.8 million. Let's keep going. So the nice thing, what she's doing is, see that green button right there, that green line? That's the 12, right there, 12 to 15% tax bracket. All right. She is like just a little bit over, a little bit under, a little bit over, a little bit under. We don't want to do Roth conversions here because she has a little bit of room, but not anything. It's just not worth it. Maybe $10,000. I wouldn't even bother. But she could. It doesn't matter. But anyway, she's right there on that 12%, the top end of the 12%. We haven't done any tax planning or anything. Look at that. So she's just right there hovering, which is perfect. So she's only 56. When she's 70 or so, that's when she starts taking Social Security. Now, should she do Roth conversions here? Maybe. I don't think so. I'm going to share with you why. She kind of thought she might, and we'll see. But I was like, I wouldn't. And the reason you don't want to do Roth conversions here is because you're going from a 12 to 15% tax bracket to a 22 to 25% tax bracket. So by doing a Roth conversion that puts you in the next tax bracket, you're giving yourself basically a 60 to 65% or something. Maybe it's even 60 to 80, maybe 60 to 83. Depending on the tax bracket, but it's a sizable tax increase because you're literally going from the 12 to the 22, the 15 to the 25. It doesn't make any sense. Now here you can make an argument to go do some Roth conversions to take advantage of the 10% tax bracket, and even the 12%, that'll be 15 in the future. But I wouldn't do it here. No reason to give yourself a big bump. Why do a $10,000 Roth conversion, which is not going to cost you $12,000? It's going to cost you $22,000 or $2,200. Don't do that. Anyway, now here you might make a case, but Josh, look, this is when she's a widow. That's the widow's tax trap right there. Right. So here's when the bulk of her taxes comes in, as you can see. is because she's a widow. The bulk of her $336,000 of taxes on $4 million of income. I mean, this might be the case where we do the Roth conversion, but I'm not convinced. Either way, that's the widow's tax trap right there. I don't think it's that big of a deal. So let's go back here. 1 second. I want to see. Here next year in 2024, she's going to work a little bit, has $32,000 of income. She's married, by the way, but she needs other money to live on. So she's going to retire in the middle of the first Q1 of 2024. She'll get $32,000 of income from wages, tips, and salaries, and then she's going to need more money so she can take a big distribution from her IRA. So you can see she has a small pension, $500 a month or so, or she got an annuity. Which I can't remember. Either way, she got $500 a month or so from a pension or annuity. I can't remember. $32,000 of wages, $91,000 of IRA distribution. So she'll have $130,000 of income. Take away their standard deduction for her and her hubby, and she'll have her taxable income will be $100,000. All right. So her AGI is $130,000. Standard deduction, pretty simple stuff here. Taxable income is $130,000. She'll pay $12,000. $12,000 because she's in the 12% tax bracket on $130,000. I mean, so she has $130,000 of AGI, but remember the tax bracket is based on your taxable income. Look at that, $130,000. She's going to in the 12% tax bracket. Again, I still want to do Roth conversions. It doesn't make sense. You're only paying $12,000 on $130,000. Dude, that's nuts, but it's going to get even better. Check this out. All right. So here in 20 years, she'll be on Social Security. All right. Everybody looking at it? She has $36,000 of IRA distributions, mandatory distributions, all adjusted for the inflation that we use in here. Her Social Security benefits, because she's taken at 70, and I think we had her husband taken at 70 as well, maybe 67, I can't remember, but it will be 140. Now, this is 20 years from now, amigos, all right? So she's getting the delayed earnings credits, and this isn't chump change. 130, well, 140 essentially today isn't, in 2043, isn't the same as 140 today, I grant you. Still $140,000. Plus smaller RMDs because she's been taking larger RMD or not RMDs distributions on the front end of her retirement to live on. So check this out. So she's got 140 plus that annuity that we'll just say 146 plus this $36,000. So that's 140 plus 42, about $180,000 of income. You seeing that? $180,000 of income. Scroll down here, she pays $7,000 of taxes on $180,000 of income. Why? Because less than half of her Social Security is subject to taxation. $139,000 of Social Security, only $67,000 subject to tax. $6,000 annuity, which hasn't been adjusted for inflation, and a $36,000 RMD because she's now 72 years old. Let's go here. Check this out. Oh, no. Oh, yes. 2041, the year previous or 2 years previous. No RMDs. See, IRA distributions, nothing. Nothing. $132,000, $133,000 of income, another $6,000 of Social Security, another $6,000 of pensions. $31,000 is their taxable Social Security. $40,000 is her AGI. Subtract $40,000 of standard deduction. Her taxable income is nothing. And by then you'll have a personal exemption as well. Her taxable income is nothing on $140,000 of income. Now that's in 20 years, 2019, something like that. But again, we just go back here. So now, remember, she has no RMDs. Her taxable, or basically, she literally pays no tax. No RMDs, no tax. Now she'll have RMDs at $36,000. So she'll pay $7,000 of taxes on $36,000. So we just simply say, okay, how much is that RMD? And I mean, this is where we get the the tax torpedo to some regard. But man, you're $7,000, dudes. So 7 divided by 36, that's a 20% tax rate on that RMD. But she's not in a 20% tax bracket. The reason is because that, look, watch what happens. That RMD now has increased, right? So she had 132 of Social Security, of which only 31,000 is subject to taxation. Now she has an RMD of $36,000, which means more than double her Social Security is subject to taxation. So that RMD increased. So that RMD of $36,000 increased her taxable income by $72,000 essentially, because here was her taxable Social Security, $31,000. Now it's $37,000. All because of that RMD. That's a tax torpedo. She has some required distributions. Not only is the required distribution now subject to taxation, but it makes more of her Social Security subject to tax. Okay, I hate to say it, but that whip-de-flip-and-do, $7,000 of taxes, $180,000 of income. Cry me a stream. They're going to get our money, Josh. They're going to Snippy Joe. I just stopped it. I mean, maybe. If you're worried about that, you better be worried about the electrical grid, man. You better be worried about the municipal water solutions. There's a million things to worry about. Why? I don't understand why we're so heavy and like, don't count on Social Security. Don't do Roth conversions because they're going to take it back. Where is the evidence of this? I don't know. I'm going to keep harping or harking? Hark on the tax code. Harking on the tax code, or maybe harping, I'm not sure. But man, pull your head out of your butts, dudes. Realize the value that Social Security is. Live like my man Georgie there, Georgie Porgy from Vermont, who I started this video on. Paying $3,500 on Obamacare. He's got $2,000 in income tax on $87,000 in income. If you got no mortgage, you got no car loan. If you can't live off, and even in Vermont, $87,000 of income, I don't know what to tell you. The median household income in the entirety of the United States is only like $75,000. You can't live on $87,000, of which $3,500 goes to Obamacare, $2,500 goes to taxes. You're living on freaking $80,000 a year in income. You can't make that work. Anyway, good stuff. I'd love to hear your thoughts. We'll see you.